G'day, welcome to another Closing Bell with me, Charlie Orman here of Fat Tail Investment Research. And we're having an out of studio session here, and I'm joined with Chief Trader from, where are you today, Murray?
Up in Brisbane today.
In Brizzy, really lovely. Having a nice weather up there?
It is absolutely perfect every single day. 27 degrees today, not a cloud in the sky. What the hell am I doing in Melbourne?
Yeah, well, Melbourne is actually lovely today. Well, I say that looking outside, it was lovely, but classic Melbourne. But anyway, today will be an hour session, but we'll crack on anyway. We'll be covering the classic trade tensions in China, which have been escalating once again. We've seen some credit stress in the US, so we'll take a look at some bonds there. Gold, once again, absolute winner, flying there. And then finally, we'll finish with some oil, because I think Murray's seen some interesting moves in there. But I guess the big news to start with, Murray, is obviously tensions between Beijing and the US once again escalating.
Yeah, well, look, I'm quite concerned about this. That China appears to be throwing down the gauntlet with their most recent sort of, saying that everyone needs to check with the Chinese before they can sell anything with more than 0.1% rare earths in a product. I mean, that's just unfathomable. And you saw the reaction from the US, which was, right, that is not going to happen, and we will get everyone else to go against you. And I actually wouldn't be surprised if that happened to an extent. And China is proving itself not to be a good business partner, and we will decouple. And that ultimately, may be the end game down the track. We've got two bullies in the room trying to work out who's in charge, and China has a lot of the leverage, and they certainly do with rare earths, and we keep finding that out, that they've got a lot of leverage that America didn't think they had. And China seems to be shirt fronting them, trying to really push this, and they may be overplaying their hand. I mean, I think they are proving themselves not to be a good business partner that you can trust. And I've been saying, are they going to shut off rare earths, and then 4 or 5 months later, when all of the defense establishment has been shut down because they can't produce anything, invade Taiwan? I mean, that could be a off-the-wall idea, but, if they were planning to go in 27 anyway, why not go in 26 when no one expects it? I don't know, but these things
Yeah.
that are going on.
To not sound like a broken record with this, we've talked about this in the last couple of weeks. It's the same thing again, but it is an escalation from China. And from the Western response, the big thing that I've seen is this new word, decouple, right? They're using it everywhere they can. Besant's brought it up a number of times. Trump's brought it up. So really, they're leaning on their Western partners.
Well, it's easier said than done, isn't it?
Yeah, absolutely. But I'm noticing responses from a lot of Western partners with this idea of decoupling. So that's definitely a major escalation in terms of that. And obviously from that, we've seen a lot of responses, like a lot of quaking within the US system. I think the most interesting development we've seen the last few days has been the regional banks in the US. Now you've seen
Yes.
some pretty big falls in there. So a rough, 6% drop in the regional bank index. We saw two regional banks go into near redundancy, well, not redundancy, so near bankruptcy overnight, right? Zion Bank and Western Alliance were signaling some issues. So
Yes.
what have you seen there?
Yeah, well, this is really interesting, isn't it? I mean, whenever there's credit stress, I mean, my ears go bing, 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 because that's what brings everything undone. Is if you're not looking, and there's where do things show up? And the fact that those two auto companies went down recently, and there's multiple billions that blew up there, and everyone was saying, is this the sign of cracks appearing? And really, you'd think if there is any stress anywhere in the system, I mean, everyone wants to pay their mortgage, don't they? They want to keep a roof over their head, and a big expense is your autos. So where is it going to start to show up, this credit stress? It makes sense that it shows up in the autos first. So I'd say this is
Yeah.
a very interesting thing to consider. And the fact that the regional banks really got hammered last night, and I'll show you the chart actually, because it is quite interesting the way it's set up, that probably we are going to see a bit more downside in that area. And the S&P itself is starting to look a little bit wobbly. A lot of volume this week, and it's actually been increasing the last few days. And the daily trends finally turned down the first time in months. So we've got the first signs for me that possibly we've got something here that could turn into something a bit more nasty. And you've got to wonder, with the gold doing what it's doing, is there people that know something we don't know that's coming down the pike? Why people are rushing for to put their money elsewhere? Either short bonds, the 2-year bonds are really rallying now, and the gold going through the roof. Is this the sign of something a bit more ominous beneath the surface, I guess?
Sorry, I was saying it looks like more than a hedge at this point when it comes to the gold movements, right? We're
Yeah,
not
well,
just seeing hedge movements here. We're
it has
seeing
a feeling
large
of
capital.
stress, and there was stress in the funding markets in the US last night as well. These are the things that you look out for as the precursor to major sell-offs. So let's have a look at the regional banks just to have a quick look at what's going on. So here's a monthly chart of the regional banks. This is going back to 2007. So here's, the crash into '08, massive run back to the upside. And what I want you to note is the rally from 2020 up to 2022. That's the wave that I'm looking at. That's the most recent major up wave in that long-term uptrend. And tracing out the buy and sell zones, you can see there. And that's the major thing I want to note on that wave. We've got the midpoint of that wave through here. So we've had a recovery in 23 to 25. So this is the regional banks. They've bounced out of that buy zone. Nice solid rally. We've already seen some selling pressure. So it's already sold off start of this year into that April scare. And then we've been recovering again. So we've already seen the start of the selling pressure. And then it's rallied again to retest that sell zone. And now this is what's happening last night is, right, it's had quite a sharp sell-off. So it's a rejection yet again from that sell zone and setting up a monthly sell pivot again. So big picture, this is actually looking like we're going to retest the point of control at least. And, who's to say we're not going to swing all the way down to the other side? This is actually the beginning of a bigger sell-off. I mean, that setup that I'm showing you there is a pretty prime example of how, things fall over. It's been rejected from that sell zone a couple of times. And now here we are, some news actually coming out and the selling pressures coming in. And also on that S&P, I do just want to go straight into that because I think it is interesting. If we just check out the daily and the volume, and this is what I'm sort of interested in, is that the volume is picking up at the moment. So here we've got, you can see here, there's your volume. This has been this past week, right? Since we've had that huge sell-off last Friday. So note that the volume has stayed high all this week. So there's been, even though it's been trying to rally, and on my system, which I can't talk too much about, I've pretty much got a solid signal on that up near the highs where it got rejected from, and the daily trend has turned down for the first time. That's since that rally began in April or May. So we've had a daily uptrend that whole time on this rally. We all know what an incredible rally this has been. It's just never stopped. It's just gone up and up and up and up. So this is the first time that we've had a daily sell pivot and this daily trend actually turning down, and the volume is really picking up. And we've got regional banks hammered 6% and fears starting to jump out. Where as who was it? Jamie Dimon or someone, JP Morgan said, when you see one cockroach, there's always another cockroach around once you see one. And so there may be more.
Absolutely.
And it's it's primed, I think, to possibly have a bit of a correction now.
Yeah, I mean, I was looking at US household debt because I did read Jamie Dimon's comments this morning about the cockroaches and kind of the concerns about private credit within it. So the US household debt is currently sitting at 18.2 trillion. That's almost 4 times what it was in 2003. And about 70% of that is mortgages, right? And a lot of those mortgages are obviously because of the '08 crash. A lot of them are on 30-year fixed and quite protected and quite regulated. But as we've seen the first signs within the auto loans, the subprime loans, like we saw First Brands, that big auto parts group, went into Chapter 11 with about $11 billion of accountancy problems, as they called it. And then we also had Tricolor, the subprime car lender, go into straight liquidation, right? Closed 60 stores overnight. So it seems like where we expect the crash to be coming through the houses, like it did in '08, it seems like the sharp end of the point is now the auto loans and the credit card loans. So it's interesting to
And
see
it
what's
makes
going to be
sense,
developing with
doesn't it?
that.
We've had this inflation
Mm.
for however many years, and just because inflation's slowed down doesn't mean prices are now going down. It just means the rate of them going up is less. And everyone's getting squeezed. Like if you're earning
Mm.
that much and inflation's going up and up and up, and now it's slowing down, I mean, you're still squeezed from how you were a few years ago. Your living standard is still worse. You know, even if inflation's now down to 3%, who cares? I'm still paying way too much for my capsicums. So, so it makes sense that there's stress somewhere. You know, how can it just never cause any problem? So the middle class has got to be, you know, under the pump, and maybe there is a bit more stress than we realise. And all this private credit that's been going on, you know, that's been a big part of the market. And when the private credit's involved, and they're getting good margin, and you know they can start cutting corners more than a bank can. So, you know, how much private credit has gone to bad debts because they're trying to squeeze as much return as they can. You know, how much have they gone down the credit worthiness, ladder so that they can get their returns, and possibly there's going to be a comeuppance on the way. I don't know. Maybe it's still too early days, but it's just something to now be thinking about, I think.
Yeah, I mean, if we're trying to find a clear indication of where we're seeing that stress or the changes within this private credit after these recent shakes, I think it's probably in the bond market, right? You see, you've seen something within the 2 year.
Yeah, absolutely. I did a update on the chart of the day just the other day, saying the 2 years looked like they were ready for a big fall, like a sharp fall. And the reasoning, and I've actually got the charts set up from what I did the other day. I'll just get rid of that. So you can see here we've got going back to 1997, and I've got the monthly chart of the US 2 year bond yield. So it's not the price, it's the yield you're looking at, which is obviously sometimes conversely to the price, right? So the yield here with the monthly, those blue circles showing you the monthly downtrend in yield. Going back to 1997, every time the monthly downtrend began, right? And what can we say about that? You know, in this instance, it fell quite a few percent, from 6 to 3%. But look at these other times. Look at the drops we've had in the past after that monthly downtrend began. You know, that was the beginning of the really big fall in yields. I don't think that's going to happen this time. Inflation's still too high. I don't see that we're going to drop all the way back to zero, but who knows? You know, what crisis is going to make things happen? I don't know. But looking at the way this is now set up, and to see how it's been moving recently, and I'll get rid of those just so we can look up close. So for the past, you know, period, once that trend turned down, rates fell 1% to 3.5%, sort of mid last year. And then we had inflation sort of bubbling along, and we had a bit of confusion for this past year, haven't we? The Fed stopped lowering rates, inflation ticked up, everyone started saying it's going to go again. So rates really went flatlined. So rather than seeing the usual, you know, steadily lowering rates over time, we've had it flatlined for a while. And you can see that 3.5% level has really held it for this past year. And basically that's saying we've got the long-term downtrend in play. It's been holding at this 3.5% level, but now it's on the edge of that giving away. So that's possibly going to see a sharp move to the downside before finding balance again. And we saw, you know, it's dropped from that 3.5%. It's already dropped 8 basis points just in the last couple of days. So it sort of looks like we're on the edge of that, and the stress, the credit stress, and those issues make sense that people are now flooding into 2-year bonds. I think it's a good time to be buying them if rates are about to drop. The 2-year yields are probably on the way down, and it's a pretty safe place to put some money if you're a bit concerned that something might be coming. And gold as well, flying through the roof. Yeah, I'm
Yeah, that's what I was going to bring up. Gold is absolute flying. It's over 4,300 an ounce. That's up 33% since August. Right, that's the best performing major asset
it's going
by
completely
far.
bonkers, isn't it? It's going completely bonkers. And this is where I've said, everyone keeps calling for the correction now. And I've been sort of saying, no, you sit back and you let it go, because you really don't know how high it can go. And look, we know that it'll probably will come in one day and it will have been up $100 and it'll be closed down $100. I mean, that's coming, but why can't it get to 5,000 before it does that? We don't know. And you just wonder whether this is a sign of something bigger going on. Maybe with China, I'm wondering, do their mates know that China's about to completely blow things up because they really do want to go into Taiwan? I don't know. And they're all piling into gold so that they can't have money confiscated from them from the US but there's something going on behind the scenes, I think, that will come out in due course, because you don't see moves like this just in the regular markets. So there's big things afoot, and maybe it is the sign that, taking a bit of money off the table and seeing how it pans out. We've all had a great year. Sometimes the worst thing you can do as a trader is, when you're going really well, is to double down, because you're up 60, like that. My retirement trader, we're up 65% now in a year. For me, that's the time to go. It's time to say thank you to the trading gods and take some money and just see what comes next, rather than doubling down and saying, oh, I'm making so much money, I'll buy this and I'll buy that and I'll buy this. And you look back in 6 months and you're going, why did I do that? So yeah, that's sort of how I'm seeing things. But I'm definitely allowing the trends to play out, and that's what is very hard as a trader to do, is to say, I don't actually know, therefore I'm just going to let the trends play out, and if momentum turns down, then I'll worry about it. Because look at this gold go. It's I don't know where it will stop.
I see ETF flows are at record highs, and I did have a look at this because we were talking about this last week about if China's partners are buying. China's repurchasing gold at records. India has also stepped up its gold buying efforts, so there is a concerted effort by central banks within their orbit that are picking up their gold purchases. But that's really interesting.
And people lined up
I think
around
finally maybe ending on oil.
Oh, yes. Yeah. Have a look at oil.
Yeah,
But
absolutely.
but there's people lined up around the block to buy gold as well. So, I mean, it's wild times. And I just wanted to update and to finish off on this oil price, because I've been saying, I did that big call a few weeks ago, basically saying it's probably going to crash, or at least possibly go into a crash-like sequence, which could be a really great buying opportunity. Because I am still bullish long-term oil. I still believe the whole story that the world's going in the wrong direction as far as thinking oil's finished and renewables are going to be able to take up the slack straight away. Possibly we can down the track, but I just think there's going to be a bit of a window where we're going to need oil and gas for a bit longer, or you need gas anyway to help keep the renewables going, really, as firming, as backup. So I just think that area of the market, people are underestimating what the demand will actually be in 3-5 years' time. So the way I see this playing out, and I've shown you before, but it's actually sold off sharply since the last few weeks. It was up around mid 60s, and I've been saying, look, once this 59 level gives way, there really is not much support, and we're seeing that US production is at all-time highs, and their inventory has been starting to rise quite rapidly. So there is a sense that things are a bit oversupplied, and if there is problems, in the plumbing, if there's credit issues, if there is something going on that we don't know about, it could show up here. So my view is, if it does actually break, this is the final point of support. It may not go through this level, and if it doesn't, fine, it can bounce. But if it does go beneath 59, there is a chance of it looking pretty scary for a little bit until it gets to sort of major support zones. And I'm ultimately thinking that that is going to be the best opportunity for the next few years, once it all does play out. Because it can all happen in a few months. You'll see in the past, there's 2 months, and then another couple of months back later it was done. Here's 2 months, and then that was it. Here's, that took a while, but you can see that once it does turn, it's only a few months, and that is all over, and you had your chance to really pick up some bargains. So that's what we'll be watching going ahead. What happens this next few weeks? Stocks may be off, gold doing something crazy, oil possibly collapsing in a bit of a scary panic, and 2-year bonds, the yields dropping very rapidly. That's sort of how I see it at the moment.
Yeah, there's two balancing stories as I see it for oil currently. We've seen Trump claiming that India is going to stop buying Russian oil, right? And then the Indians pushed back and said there's been no phone call between Trump and Modi, and that they're going to keep diversifying. I mean, whether or not that actually happens, see if they can keep leaning on them for pressure there. I was reading last year, India bought $52 billion worth of Russian crude. It's roughly nearly 40% of their entire oil bill just within that. So there's a big buy there if they can actually pull that back. But at the same time, overnight, Trump and Putin had what was called a very productive call, and they're planning to meet in Budapest in a week or so. So maybe talks of kind of find a ceasefire deal for the Ukraine, which would be another massive change within the oil prices. So there's a lot moving on there. But I think we'll leave it there, Murray.
Yep.
There's a lot going on. It seems like we're repeating the same stories, but they're just getting more amplified every week we come to these. So it's really interesting times. But thanks for your great insights there.
That's it. And we keep picking the right direction. So that's good.
Yeah, we absolutely do. All right. Well, thanks, mate. And thank you all for watching.
All right. Cheers. Bye-bye.